Right, here's your weekly livestock and ag roundup for New Zealand, 9th through 13th of February. This week's about money and the long tail of decisions. Farmers voting on levies, companies carving up billions, and a random technical detail like refrigerant suddenly becoming a 15 to 20-year risk. Plus red meat export hit a record, and the store cattle market's acting like there's more grass in the country than hours in the day. Let's go. First up, the DairyNZ levy vote. 9th of February, Farmers Weekly reported that the 6-yearly vote on the milk solids levy that funds DairyNZ is opening up. Voting runs 16th of February through 13th of March. They're not changing the rate, stays at 4.5 cents per kilo of milk solids, with a 5-cent ceiling. For farmers, it's simple. Either the sector keeps paying for the industrial stuff, research, extension, policy work, support beyond the farm gate, or that infrastructure deflates and every operation sorts those problems solo. Comes down to turnout and whether farmers reckon the return on collective programs is real. Trigger for clarity. Vote results after 13th of March. Second, Fonterra and the idea of getting $2 a share back. 11th of February, Farmers Weekly said Fonterra shareholders vote on a capital return scheme. $2 per supply share following the mainland group sale to Lactalis. Goes to a special online meeting 19th of February. Needs 75% approval to proceed to court for final sign-off. Payout expected late March. Effects dual for farmers. Short term, significant cash hits your account, and there'll be temptation to clear debt, buy assets, or sit tight and avoid risk. Long term. Before payout date, expect activity around shares because Fonterra's flexible ownership means people will be adjusting their holdings to suit their goals. What's next? Shareholder decision, 19th of Feb, then formal court stage. Third, Chinese outfit Yili strengthening its New Zealand block and swapping management. 10th of February, Farmers Weekly reported Alex Turnbull's been appointed Chief Executive of Yili Group's New Zealand division, running 5 companies at once: Westland Milk Products, Oceania Dairy, Canary, EasyYo, and Pure Nutrition. Starts 16th of February. For the dairy sector, this isn't slogans. When a major investor owns both processing and higher value products, management decisions reach the farm fast through raw milk specs, contracts, premiums, and capacity plans. Article mentions focus on high-value protein and fat categories, and demand outstripping supply in some areas, usually means fighting for milk and for supply stability. What's next? First signals will be procurement policy and how Yili develops the farmer partnerships mentioned in the comments. Fourth story's not loud but bloody practical. Dairy farms and refrigerants in cooling and heating systems. 13th of February, Farmers Weekly wrote that international and domestic pressures building on 400 series refrigerants with high global warming potential, and farmers should pay attention to what their gear runs on. Article quotes an engineer. Roughly 70% of farms use 400 series, another 20% use other high GWP options, and about 10% use lower GWP solutions. Practical effect isn't banned tomorrow. It's about servicing and ownership cost. If your chosen refrigerant gradually becomes scarcer, service gets pricier, leak and refill costs climb, and the kit sits on your farm for 15 to 20 years. Article specifically mentions New Zealand's part of the phased HFC reduction under the Kigali Amendment, so the fog on the horizon's fairly real. What's next? When you're upgrading or replacing components, this becomes part of the brief, not a minor detail like the neighbours got. Fifth, meat export of red meat and 5th quarter set an annual record. 13th of February. Farmers Weekly reported that, according to the Meat Industry Association, Red meat and fifth quarter exports in 2025 reached $11.7 billion, up 19% on 2024. Article also says the States became the biggest market, China second, with figures showing value growth across several destinations, including the EU and UK. For farms, meaning straightforward. When global supply's tight, prices hold higher, and it partly covers bad news like weak economies in individual buyer countries. But there's practical caution. Record by value doesn't equal record by volume. Article straight up says lamb volume barely changed, and beef volume dropped despite revenue growth. Markets paying more, but not necessarily taking more. What's next? Triggers how processors and kill schedules play this situation into farm gate prices and throughput capacity, especially closer to peak periods. Sixth, store cattle market. Prices keep hurting anyone who rocks up to buy. 13th of February, Farmers Weekly Market section covered a Matafedo sale and painted the picture. Grass-driven demand, strong meat schedules, positive expectations, and shortage of supply pushing budgets up. Case details a big line of nearly 950 steers, and road issues meant stock stayed closer to home, which affected venue choice. Practical takeaway for farmers: when supply's scarce, the market rewards quality, even lines in big numbers, and logistics plus road conditions can suddenly change routes and buyer competition. Second takeaway: risk for anyone buying for finishing. Entry price is high, and any slip on grass, weather, or kill timing eats margin faster than usual. What's next? Watch the flow of prime stock and whether the works hold strong schedules, because that's one of the main drivers of current prices. Seventh, wool. Premium contract for regenerative strong wool. Two confirmations here. RNZ reported a deal where regenerative sheep farmers get above market payment through a Wools of New Zealand contract supplying Keraplast. Farmers Weekly separately wrote that price is $6.88 per kilo clean for the 2025 to 26 season, described as roughly a 40% premium to market levels, and the contract covers about 400 tonnes over 5 years from 30 producers. For sheep farmers, the meaning's clear and rare. This isn't hope the auction's kind, it's price and demand locked in contract, plus tied to high-value use, keratin materials for cosmetics, nutraceuticals, and medical applications. Practical effect on farm: motivation to maintain quality, traceability, and certification standards, because that's exactly what earns the premium. What's next? Whether the producer pool expands, and if similar contracts appear for other end uses, because those are what pull strong wool out of once a year we sigh and move on mode. Eighth, tech on the meat and sheep side. Farming for Profit Field Day focused on AI and tools. The Country, via NZ Herald, on 12th of February, wrote that Beef Plus Lamb NZ's running a field day at Tangihanga Station in Patutahi, 27th of February, focus on practical application of tech, innovation, and AI for profitability. Visible text lists topic examples: e-shepherd collars, electric fencing, drones for mustering, counting and spraying, and specifically, opportunities in artificial intelligence. For farmers, this isn't about what's trendy. It's choosing tools for specific jobs: stock control, saving time on travel, accuracy in counting, reducing losses, and mainly manageability. So decisions get made on data, not gut feel. What's next? Triggers the field day itself on 27th of Feb, and which case studies show as actually working in Tairafiti field conditions. Right, that's it. If you stack the week into one line, it's about capital and discipline. Dairies simultaneously voting on industry support and dividing up major payouts. Meats locked a revenue record on tight supply. And down on the ground, store cattle prices and equipment requirements remind you that margin still gets made on risk management and quality execution. If this is useful, chuck us a like and subscribe. Catch ya.